Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Good morning, welcome to this week's report. As always, let's start with the call to action. Let me go ahead and get the screen pulled up here so that we can see what's going on. And for this week, again, like last week, no action recommended. That's not to say it's not an important week. I would like you to watch the video because there's a lot of points here. We have some questions that need to be answered, but I am not recommending more sales or really any action at this time. So let's jump into a little bit of the thought process behind that and what's going on in markets in general. Pulling up the images and we'll share that. Okay, so just starting with a little bit of an update. Probably one of the headlines that has been a little bit more bullish just from a fundamental standpoint has been this delay to corn planting out of Brazil. So let me pull up the marker, get a good color. I think green works well. Okay, green. Okay, so for comparison, last year on February 17th, Brazil was 45%, just over 45% planted with their double crop corn. And then I'll circle where they're at right now. This year, as of February 16th, they're 35.7% planted. So they are still behind pace, about 10 percentage points behind pace, but they really have moved fast this last week. Personally, I'm not overly concerned. I think that they will get their crop in. I also think it's important, let me just back out of that. Okay, I also think it's important to note, last week we had USDA reports and we had CONAB reports. So the USDA report, actually use this hand. The USDA report came out first. The USDA report was higher, but it slightly reduced the size of the South American crop. No change to soybeans, but they cut corn in 1 million metric tons in Brazil, and they cut Argentina, both their corn and soybean numbers. So South American crop, USDA was up here, they reduced a little bit. Then the CONAB came out on Thursday with the Brazil's crop, and they actually increased a little bit, not soybeans, but they increased corn a little bit, and they increased corn because of acreage. So CONAB is not that concerned. That's the Brazilian agency, similar to the USDA. They are not too concerned with this delayed planting. They're actually saying, hey, this corn rally probably is actually going to make a few farmers scramble to get out a few more corn acres. the increase to production, there was very slight variations to yield from them. So really most of it came from acreage. And that's just a projection. We don't know that that's going to happen. But I do think, personally, I don't think the story is going to be more continued delays to planting. I don't really expect that to be the story. I expect them to get in the crop. Now, it is a double crop, and I talked about this last week. Every single day that you delay potentially moves you farther away or reduces the probability that you'll get that crop in the window. Technically, as long as you plant in February, you're fine. Some regions up to about the 10th of March, you're fine. So we're not out of like a theoretical window. But the way the double crop corn works is you have to get that last rainfall at that critical pollination phase, just critical yield forming phase. You have to get that last rainfall in time. So yes, there's a window, and beyond maybe the 10th of March, it gets very risky to where it might be better to not even plant. But even in that window, there's no guarantee you're going to get that rainfall. So I personally think that the delayed planting story is primarily in the rearview mirror when it comes to corn out of Brazil. That doesn't mean that they're out of the woods from a production standpoint. And then soybean harvest is tracking. Let me get a marker up here. I think blue would work nicely. Let's see if we can get the marker and then select blue. Boom, there we go. Soybeans are also a little bit behind pace compared to last year, but only about 4 percentage points. So that's not really much of a story. Soybean harvest, a quarter of the way done. They're picking beans. This is right in the middle of harvest, just right in the, bins are filling up and they're trying to move this grain, and it's just, these next couple weeks, it's just right smack dab in the middle of harvest. Okay. The other thing I wanted to point out was this wheat chart. I'll get a black marker here for wheat. Black selected, okay. Wow, last Friday was a doozy on the wheat market. Whenever you have a level of geopolitical uncertainty, the commodities that are closest to the table, those get hit the most. And I've been saying for some time that it seems to me like speculators in general and just the world at large, this is a little bit different than the first Trump administration as far as the response of the world. And it seems to me like speculators in other countries, they're more in the mode of, let me make sure I have enough in case of geopolitical conflict. They're more concerned with inflation or trade wars, and the U.S. does have an abundance of food. So in 2018, what happened was there was trade wars, and they said, well, nobody wants U.S. soybeans, prices plummeted. This time around, so far, seems a little bit differently to me. It seems like the U.S. has food, the world is a little uneasy, and we're getting speculators buying grain. Now, speculative money can come into the market, it could go out of the market. So that's not to say that this is a forever thing, this is going to be great, but we just have to monitor this week by week. And I think that that corn rally for me is very interesting, and it's very telling. The wheat rally that's circled on the screen. That's a huge, strong day for wheat. That reminds me of big, strong days we had in the wheat market back when the Ukraine market conflict broke, the war and other geopolitical conflicts. So I think that there might be a story from a geopolitical standpoint in grains that is a little bit underemphasized right now. But if you watch what speculators are doing, it's not very underemphasized. All right, let's jump in. Let's get the pyramid up there. So if you're watching this in real time, you and I have worked together to build a portfolio. You know exactly how your bushels fit, exactly how these recommendations fit into your strategy. That is the base level. That's what keeps us disciplined. That's what keeps us on target. That's what keeps us on points.
That's what helps us know how much to sell, is really that portfolio. And then we go to the middle level, that green level, that's seasonals, technicals. That's how, those are our weekly tweaks. That's the when in large part and how we're going to sell. That's just weekly adjusting the portfolio. And this week said no action recommended because the assumption is we've been tracking together. And then finally action, right? This week, no action recommended. If you don't have time to watch the video, that's understandable. I always encourage, when we put out these videos, it's a lot of effort to keep you informed and keep you in the loop. And I want you to feel comfortable. So I always like it when you watch them. But the truth of the matter is, what pays your bills, what makes the difference, is taking the right action at the right time. So no action recommended this week. Let's jump into the position of the corn funds. And very interesting thing happening last week. We finally saw, so I'm going to draw this in blue. I got that blue selected. And let me circle here, November. Boom, there we go. November, the speculators got a position, a positive position in corn funds. So this is the managed money. This is speculative money buying corn. A simple way to think about it is let me get this here. Oh, sorry. Get this here at the top. There we go. This over here is the 0 mark. If it's below 0, change that to red. If it's below 0, think that the price of corn on the board of trade is artificially low. And I'll switch it to green. If it's above 0, think that the price of corn on the board of trade is artificially high. That's just a nice way to think about it. Speculators are buying corn and lifting it up, or speculators are selling it. And then every now and then you have these transition points. So if you want to think of what is the price of corn, when was the price of corn like without the impact of speculators? You kind of have to get these transition points, the points where they're practically zeroed out. We can look at what the price was at the beginning of November in just a minute. But what I wanted to point out was that since the first week of November, we have seen just this stair step up here. Let me switch that back to blue. It'll be a little easier to see. Okay, blue. Okay. We saw this stair step up and in positions till we got about right here, and that was the end of December. And then throughout January, we basically just saw a straight up move until last week. Last week, they backed off of that. So I'm not saying that, hey, corn rally's over, forget about it. We're going to look over the technicals in just a minute. But we do need to pay a lot of attention. Speculators were buy corn, all of all of November, all of January. And then in February, we kind of saw that peak out and they're coming back down. That's last week. Now, maybe they'll go back and buy it next week, but they've stopped buying it. That doesn't mean that corn prices have come down, but they reduced their long position. They actually got out of some long positions. They took profits on some long positions on corn. That is noteworthy. Now let's see what happened to price action. First contract that I want to show is May. We still have March on the board, right? If you have some cash positions, and we do have some hedges on in May and March. So March is still a relevant contract, but as we talk about decision making, we're gradually going to be shifting more to that May contract just because there's not too much left on the March contract. So May corn, it's actually very interesting. If you look at it, this doesn't really look like a market that has a ton of sign of weakness. If we go back here, let me get a black marker, black, there we go. And let me move this to the bottom of the screen if I can. There we go. Right here. We got this key reversal, and that was what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, I'm pretty sure that was 2 Mondays ago. We got that key reversal in corn. And ever since then, corn has been trading not only above the 20-day moving average, basically, but it's been trading strong. I mean, even the overnight trade so far is still above the previous day's lows. May corn is really pretty strong. How high can it go? I think that's the real question, because the other way to read this is look at all of the selling pressure. If you think about over $5, let me back this out to clean it up a little bit. And I realize that in cash markets, it's not quite like that, but let's just look at the $5 mark. Basically, this dime over $5, between 5 and 5.10, that has just been sold. We've not really seen a rally above that. So one way to look at it is kind of this first line that I drew, which is saying, oh, corn is really strong, it's going to keep going up. The other way to look at it is to say there's a lot of selling pressure on this corn market, and until it's going to be hard. Maybe it kind of goes sideways in here, but it's going to be hard to get up over that until we actually get up over that. So this is part of the thought process with why no action is recommended, because the two more probable things that I think will happen shorter term is we run out of steam to get over here, and then eventually it comes down to some level of correction. And it could come all the way down here, the 200-day moving average coming up. That's one option. If that happens, then we have all of those hedges on, right? Which on the way down, we'll be doing just fine with those positions. And the other thing that we should happen as that falls, to the extent that there is demand for corn, we'll likely see basis improve. So we've got sold positions. If this corn market falls and basis improves, that's when we're going to be wanting to get out of our hedges and sell in the cash market. The other thing that could happen is what just with today's overnight trade kind of looks more probable, which is, yeah, we do have a tremendous amount of selling pressure here, but we're gradually getting up over that. And then as soon as we get up over that, speculators will have another reason. We've chewed through a bunch of sales orders. Then farmers are saying, oh, I'm not going to sell now because, I already sold my bunch of $5 corn. And then we're making another run up, 5.20, 5.30. We get another run up from speculators. And then that's when I'll be more interested in selling more aggressively. So that's the May corn. And then if we look out to December corn, and this is actually one of the questions that we'll get to later. December corn, it's not bad, right? But let's just compare these prices. This is December corn is 473.5. May corn is 509.25. So let's just round it. 509. If you want to call it 510 minus 473, that's a pretty big difference. And actually, if you look at July D's corn, that's a 38-cent difference. This is the spread. I kind of got to that kind of fast, but let me slow down here to make sure everybody understands what we did here. That'll be confusing. Okay, so get the highlighter here. So this is the July contract minus the December contract that I just highlighted in green there. And so if you take the difference between those two, let's get back to the marker, it's 38 cents. July is trading 38, almost 39 cents above December. So what we're having, it's called bull spreading, when the nearby contracts or the old crop contracts, they trade higher than the new crop contracts, right? That's bull spreading. And that's potentially friendly markets. It's also interesting to see that it kind of tried to fail, the bull spreading tried to fail last week and already did that V recovery. There's several technical indicators in the corn market that continue strong. So part of the reason there's no action recommended this week is because I feel like something has to give. Even last week, this was a little bit of the sentiment. Either the corn market's going to break, and if it breaks, then okay, we've got hedges on, we're hoping for higher basis, we can manage a break in the corn market. or it's going to have to go up to a higher level. And if it goes up to a higher level, we don't want to be intensifying sales here if it's going to make another move up. So we want to just hold off on sales here because we've already sold a good chunk. We've already have a good chunk of sales here at this price level. All right, let's keep going to soybeans. In the soybean market, let's get a marker. I think, let's see what'll look good on that. Maybe yellow. Let's see if yellow shows up. The soybean market also, it's just not as dramatic, right? They switched to positive in January. January 7th, it was still negative. Got positive, and it's already coming back down here. So we have the net long position of speculators reduced quite a bit last week on soybean, and that's not surprising if we look at prices. Let me back out of this and go over to the prices. This is what happened on the markets. Let's get a black marker up here. Select black. We were move this. Oh, messed that up. Move this over here to the side. So it got positive in January. Right here, speculators were negative. Then here they started buying soybeans. Right here they started buying soybeans. Soybeans. And then last week, let's see, 1, 2, 3, 4, 5. Last week we saw them actually sell, which absolutely makes sense based on the chart. So where are they going now? And this is a very interesting point because we had we bought soybeans in here with the idea of a golden cross being friendly, right? Not a tremendous amount, but soybeans that we had sold in Q4, we got some of those back on the books in here, and those are underwater right now. What's the rationale? Well, we'll start out with the bad news. It's possible that we're getting a failed golden cross, and it's going to do one of these. All right, that's the bad news. If that's the case, honestly, in my opinion, we just kind of wait until we get down here to where we can average in, and then we have an average from here. We double up because we have most of it to re-own down here, so we get a weighted average lower, and then our average buy-in will be somewhere probably around in here, and then we're set for the spring rally. It got a little bit messy on the chart. But it's also possible, in my opinion, if corn's going to stay strong, I don't know how much beans fall down, and they might just kind of turn this corner here, and we might get one of these, and then we go to golden cross over in here, and then we're off to the races again. I don't have a crystal ball, but I do think that the corn and soybean ratio, and we'll talk about that more in the Q&A because I think a lot of people are concerned about the ratio between corn and soybeans. I think that is a factor, and I think that's going to be maybe the main narrative of March is kind of the battle for acres and what's going to happen to that ratio. So I won't get into that too detailed right now. But I would say this is similar to what we saw on that corn spread where we were comparing July to December. This is July soybeans compared to November soybeans, and you can see it's a very different story. So the corn spread looks something like this, right? And it was way up here at 38 cents difference between the old and the new crop. Well, the bean spread started off a little bit, but then it's come all the way back down. Another way to think about that is that the new crop beans are 17 cents right here. New crop beans are 17 cents above the July beans. And what we're long in is July. So the thought process is we are long in the commodity that is the relatively weak, so to speak. I mean, it's not down at these levels, right? But it's, we got in a few sessions ago, so we got in right around here. And actually, I think it was a little bit before that. I think it was like in here. Similar price level. So that spread is a little bit weak. That's showing a little bit of weakness in the bean market. But again, I feel like something has to give in this market. And then until it gives, I'm not too excited about adjusting our strategy of where we're at. So that's the images. I'll close down this screen, and then we're going to go to just kind of that summary, and then we'll wrap up with some questions and answers. Okay, so let me share this screen here. We'll go over this. Corn seasonals. It is not yet a sell, so it's just neutral. It's not a buy or a sell. Soybean seasonals are technically a buy, right in the middle of harvest in Brazil. Managed money, speculative corn position is still high enough to justify selling corn to kind of against the overbought position of the funds. Even though in soybeans the funds are long, they haven't accumulated a big enough soybean position to justify selling. And then corn is in an uptrend, and beans are in a downtrend. Let's see if we can get the audio here. English. Corn and soybean levels are basis. I messed that up. Let me delete that. Basis levels are stable, period. Stable, comma, sideways basis is the normal pattern for winter trade, period. In the absence of a significant sell-off or rally in the corn or soybean market, I don't expect a significant story out of basis short term. The corn market is showing technical strength. The soybean market is showing technical weakness. The ratio between soybeans and corn favors more corn acres over bean acres. Will prices adjust accordingly in the next month? So that's my question, but I'm actually, let's turn this off. I'll look back here. Okay, that last question, that's mine, but I'm actually going to go over some other questions because there's some important things to go over. So we have a few questions here. First question, why aren't you recommending more new crop sales? Why aren't you recommending more new crop sales? When we look at, we're building a portfolio and we're selling seasonals, funds, and technicals. Okay, so let's talk about those. Seasonally, it is not a time to sell either corn or soybeans. That's a big one. Funds. Okay, it is justified to sell corn. And maybe we should be selling more corn speculatively out to the future. But the way I feel about it and the thought process is we're seeing speculators buy old crop corn. Remember that spread is 38 cents difference between July and December. So yes, there is speculative buying. They're limiting it to old crop for now. We don't have a new crop story. what happens once we get weather risk? Or what if supply and demand got tight enough to where all of a sudden there's actual demand for new crops? So we're not really seeing the same rally in new crop that we've seen in old crop. It's tempting to look at old crop and say, oh, there's $5 prices. We should be selling more new crop corn, because I told myself when I saw $5, I was going to sell it. But we're seeing that in the old crop. We need to see new crop play catch up a little bit. And the other point is we have been selling into this, right? We had Q4 bushels. We have old crop that we're selling into this. So, and we have started an average on our new crop as well. Long and the short of it, we have a stake in the ground. We got a stake in the ground at this time. We've started selling, and we either need the season to tell us to sell more, or we need technicals, basically that spread, to come up and say to sell more, or we just need a little bit more in that new crop contract. So the hesitation to sell new crop is just because it's early. We've got time. We've got quite a bit of time before we need to sell new crop. Next question. Do we have a new normal in the bean corn ratio? Now, this is an interesting one. So let me just explain this a little bit. So we typically see that ratio between beans, so the new crop beans divided by new crop corn. We typically see that 2.5, 2.4. That's typically where we see that ratio. We're at I have a note here, 2.21 right now. So that ratio is low. And for this time of year in recent history, this is as low as that has been. The question is this a new normal? Basically, the underlying question there is, will Brazil consistently produce more soybeans to where the U.S. has to kind of shift? It has to produce more corn and less beans. Are we going to see farmers, instead of a 50-50, plant a 60-40 or a 70-30 rotation as their normal? And some do, but it's just, I do think that's an interesting question, and I think it's an interesting conversation. I'll just tell a quick anecdote about that story. I was in 2005, when it was still open outcry, I was a runner at the Board of Trade, and I remember I was talking to a guy there, and I said, I grew up on a farm in Brazil, and just telling about stories. He's like, oh, Brazil, they can just produce all the soybeans that they want. That's fine. We'll just produce corn, and let them produce beans and let us produce corn. Well, that was 20 years ago, and the U.S. still produces a lot of beans. Also, Brazil kind of learned how to produce double crop corn. So his forecast, so to speak, was way off. I'm always a little bit cautious about thinking things are new normals, because $6 corn is the new normal, $5.50 corn is the new normal. Well, it wasn't, so I do think we have a higher price level because of inflation. We're not talking about $2 corn. Corn gets a little uncomfortable in the threes. So we have, to some extent, ratcheted up the value of corn, but maybe corn's a little bit more comfortable between 4 and 5 than it was before COVID. Maybe before COVID, it was more comfortable just between, say, 375 and 425 or something like that. But we have a little higher price level, but it's still I guess things kind of went back to normal after the big rally. The caveat to that I would say is I have a little bit more generous view of what I consider normal in that ratio. For me, normal in that ratio is anywhere between 2.3 to 2.7. So I don't peg a number. Oh, normal is 2.4. If it falls down to 2.3, it's going to come up. Or normal is 2.5. It goes to 2.6. It's going to come back down. So for me, I think of normal as a range between about 2.3 and 2.7. It's 2.2. I feel like it has to catch up a little bit, but it's a lot easier for it to come up to the bottom end of that range, get to a 2.3, 2.35. And then in my book, I'll still say that's normal. Where a lot of people would say, oh, it still has to keep going. I think that the corn and the bean market need to come together, and I think very likely we'll see some of that adjustment during either late February or during March, the battle for acres month. I don't really think we're in a new normal, but I do have a pretty wide range of what I consider normal. And for me, it's 2.3 to 2.7. We're outside of that. I think it needs to come up a little. Question number 3. Will wheat keep going up? Gosh, I do wish I had a crystal ball, right? I would love to have a crystal ball to answer some of these questions. Seasonally, March a lot of times is a strong month for wheat. So there is still potential in the wheat market. That said, whenever we get a nice up rally in wheat, whenever we really get that move up, it's a good market to sell. So if you, a good proxy where 75% price on Q1 corn, and just think about that in numbers. Are we ahead or behind on pricing? Well, we're in the middle of Q1 and we're already 75% priced, and we were 75% priced 2 weeks ago. So we've actually been fairly aggressive in my mind on our pricing. Now we still got some new crop work to go. We've started on new crop, we still got more to go, but we have been selling into this, right? So that's a good proxy for where you should be. You should be about 75% price on your Q1 wheat, in my opinion. And then a lot of times we do get another leg up in March. If we get that wheat market just being explosive to the upside, I think that'll tip the balance. And I think we could very likely, let's say that wheat goes up. Let's say that whatever started on Friday isn't done and wheat's going to go up. I think it's hard for corn to get stuck, not move up. So if wheat goes up, I'm guessing it pulls corn. And if corn can get over kind of this psychological pressure of selling, if we saw 520, 530 corn, all of a sudden I wonder if farmers will be like, well, I'm not selling now. I sold $5 corn. I thought it was a good price. I sold $4.90 corn. I thought it was a good price. I'm sure not selling 530 because where's this thing going? Maybe it's going back up $6. I need to sell $6 corn. If we get that, right, wheat goes up, then corn goes up, I think it'll be hard for beans to keep going down. So I would love for wheat to take that other leg up, but I do think making sure you're caught up on wheat sales makes a lot of sense in here. And a good proxy is, we're 75% price on corn, get to 75 on Q1 corn, get 75% price on wheat. I think that's a good proxy. Gives you more, dry powder. If this keeps rallying, we'll sell more into it. And we've also started on some Q2 sales as well. That's the questions. That's the week. Thanks for watching, and we will be in touch.